Let's talk about the 283 billion IT sector, which is at crossroads today in 2025, hit by two challenges: the global capability centers and artificial intelligence. If you're a long term investor, you might be wondering if this is a crisis or an opportunity for stocks like TCS, Infosys, and Wipro. I'm Elon Chusk, and let's dive into a 5 minute breakdown to shape your investment out. As an investor in Indian IT, you're betting on a sector that has been a cornerstone of India's economy, driving jobs and exports for decades. Companies like TCS, Infosys, and Wipro have been reliable wealth creators. But 2025 has thrown up a big challenge that will test their resilience. The question isn't just about survival or short term turbulence that we have seen earlier. It's whether these firms can adapt and transform this industry to deliver a long term value. With global tech spendings under pressure and structural shift reshaping outsourcing, let's check the pulse of the market before diving deeper. The Nifty IT index, tracking India's top 10 IT firms, is struggling. As of August 2025, it is down 20% year on date, lagging behind Nifty 50. Here is the damage. TCS is down 33.8% from its August highs, shedding over 5 lakh crores in market cap. Infosys dropped 29% with a 14.1% year to date decline. Wipro is down one third of its market cap in 2 years. 7 of the 10 Nifty IT stocks are in a bear territory, hit by weak demand, tariff concerns, and structural shifts. This sets a tough backdrop for our discussion further. Today, we will unpack the twin problems shaking Indian IT: global capability centers, how MNC hubs are stealing talent and contracts, artificial intelligence, why automation is disrupting jobs and reshaping the workforce, the road ahead: can Indian IT pivot for growth, and what's the long term investors play? Let's break it down. Let's talk GCCs. These are in house tech hubs set by global giants like Microsoft, Google, and the Citibank in cities like Bangalore and Hyderabad. Once basic back offices, they now handle high value work: AI, cybersecurity, analytics, and R&D, bypassing traditional IT firms. In 2025, over 1,700 GCCs employed nearly 2 million professionals, growing at an astounding rate of 11% per annum. Compare that to the IT industry, which is growing basically at 8%. These GCCs account for 23 to 25% of India's IT export, eroding the traditional outsourcing model. For example, Commonwealth Bank slashed its TCS team from 2,500 to 500 after building their own GCC. Worse, GCCs poach talent with 30% higher pay, causing a bigger attrition at the IT firms. For investors, this is a red flag. GCCs are cannibalizing contracts and talent, hitting revenue and margins. Stocks like Wipro, already down 25%, reflect this pressure as clients insource critical projects. Next up, it's AI. It's automating routine IT tasks: coding, testing, customer support, faster than ever. In 2025, this is reshaping India's IT workforce. TCS alone cut 12,000 mid level jobs as AI tools like code generators and chatbots took over. Globally, tech layoffs hit 130,000 this year, and India's outsourcing model built on large teams is really vulnerable. AI is flattening the IT pyramid, cutting mid tier roles and demanding IT skilled talent. For investors, this means short term pay, lower earnings, and stock dips, but also potential. GCCs and AIs aren't separate. They actually amplify each other. GCCs use AI to innovate faster, pulling high value work from IT firms. As a long term investor, you are navigating volatility. IT stocks are at a multi year low, but the valuations are compelling. TCS and Infosys' PE ratios are 20-25 percent below their 5 year average. So, what is the challenge? Can these firms pivot before the market loses patience? I'm cautiously bullish. Indian IT firms are adapting. TCS is reskilling 1 to 2 million workers for AI roles, and Infosys is pitching for GCC as a service to partner with MNCs. By 2030, GCCs will employ 2.8 million resources while driving India's tech ecosystem and creating spillover benefits for the agile IT firms. For investors, diversify. Hold resilient giants like TCS and explore AI focused players. And consider Nifty's IT ETF for broad exposure. The sector is not going to die, it's just evolving into a high value, AI driven model. With valuations low, buying now can position you for a recovery as IT exports rebound. So watch out. Indian IT is navigating a storm, but storms breed opportunity. GCCs and AI are challenges, but they are also pushing innovation. As long as term investors stay patient, like, subscribe, and share your thoughts, bullish or bearish on Indian IT. See you next time. Bye bye, Tada.